Welcome, fellow seekers of financial wisdom, to a game-changing exploration of the investment answer. Are you tired of feeling overwhelmed by the complexity of investing? Goldie and Gordon S have distilled the essence of successful investing into 5 key decisions. Today, we're delving deep into the top 10 lessons from this empowering book. Get ready to gain the knowledge and confidence you need to build a solid investment foundation and achieve your financial goals. Keep watching for our secret scavenger hunt question hidden in this video. Lesson 1. The 5 key decisions. The investment answer starts with the core message that successful investing boils down to 5 key decisions. 1. Determine your asset allocation. 2. Diversify within asset classes. 3. Rebalance your portfolio regularly. 4. Keep costs low. 5. Stay disciplined. Understanding these fundamental decisions is essential for crafting a strong investment strategy that aligns with your risk tolerance, time horizon, and financial goals. Lesson 2. Asset allocation matters. Most asset allocation is the primary driver of portfolio performance. The book highlights the significance of selecting the right mix of assets to optimize returns while managing risk. Consider your investment objectives and time horizon to determine the appropriate allocation between stocks, bonds, and cash. Adjust your asset allocation as your circumstances change and periodically rebalance to maintain your desired risk level. Lesson 3. The power of diversification. Diversification is the antidote to risk. The investment answer emphasizes the importance of spreading your investments across various asset classes and securities to mitigate the impact of market fluctuations. Avoid putting all your money into a single stock or sector. Instead, diversify across different industries, regions, and investment types. This strategy can protect your portfolio from the adverse effects of a downturn in any specific sector. Lesson 4. Regular rebalancing. Rebalancing your portfolio ensures that it stays in line with your desired asset allocation. The book emphasizes the value of periodically realigning your investments to maintain your risk profile. Set a schedule for rebalancing, such as annually or quarterly, and stick to it. During rebalancing, sell assets that have exceeded their target percentage and buy those that have fallen below. This process helps you avoid becoming overly exposed to volatile assets and keeps your portfolio on track. Lesson 5. Keeping costs low. High costs can erode your investment returns over time. The investment answer stresses the significance of minimizing fees and expenses associated with investing. Choose low-cost investment options, such as index funds and exchange-traded funds, ETFs, which offer broad market exposure at a fraction of the cost of actively managed funds. Be mindful of transaction costs and other fees that can eat into your gains. What do you do on a daily basis to keep your budget and costs low? Let us know in the comments and we'll respond every time. Lesson 6. Overcoming behavioral biases. Investing is as much about managing emotions as it is about numbers. The book delves into common behavioral biases that can sabotage your investment success. Recognize tendencies like fear of missing out, FOMO, and loss aversion that can lead to impulsive and emotional investment decisions. Stay disciplined and stick to your long-term investment strategy to avoid making reactive choices based on short-term market movements. Lesson 7. The impact of taxes. Taxes can significantly affect your investment returns. The investment answer highlights the importance of tax-efficient investing to preserve more of your gains. Consider tax-advantaged accounts like IRAs and 401(k)s to minimize taxes on investment earnings. Be mindful of tax implications when making investment decisions, and utilize strategies like tax loss harvesting to offset gains with losses and reduce your tax liability. If you're finding value in these lessons, make sure to hit that subscribe button and turn on the notification bell. We have more empowering content coming your way. Lesson 8. Understanding risk and return go hand in hand. The book emphasizes the necessity of understanding and managing risk when making investment choices. Assess your risk tolerance and align it with your investment strategy. Remember that higher potential returns often come with increased risk. Avoid making investments that exceed your comfort level, and stay informed about the risks associated with different assets. Lesson 9. The impact of inflation. Inflation can erode the purchasing power of your money over time. The investment answer reminds us of the importance of accounting for inflation in our investment decisions. Choose investments that have the potential to outpace inflation and protect your wealth over the long term. Consider assets like real estate and stocks that historically have shown the ability to preserve purchasing power. Don't forget to watch until the end to uncover the 3 actionable recommendations to revolutionize your investment journey. Lesson 10. The value of professional advice. Professional financial advice can provide valuable guidance and insight. The investment answer encourages seeking advice from qualified advisors when navigating complex financial decisions. Consult with certified financial planners, CFPs, and investment professionals to create a personalized investment plan that aligns with your goals. Understand the fees and services provided by your advisors and ensure they act in your best interest. You've been watching patiently, so let's wrap up with the top 3 action items for today. Actionable recommendation. 1. Define your investment objectives. Start by clarifying your investment objectives and risk tolerance. Understand what you want to achieve with your investments and the timeline for achieving those goals. Whether it's retirement, buying a home, or funding your child's education, setting clear objectives will guide your investment decisions and help you stay focused on your long-term goals. Actionable recommendation. 2. Create a diversified portfolio. Construct a well-diversified portfolio that aligns with your asset allocation strategy. Spread your investments across a mix of asset classes, such as stocks, bonds, and cash, to reduce the impact of market fluctuations. Consider investing in index funds or ETFs to gain broad exposure to various markets while keeping costs low. Rebalance your portfolio regularly to maintain your desired asset allocation. Actionable recommendation 3. Stay disciplined and informed. Investing is a journey that requires discipline and a commitment to continuous learning. Stay informed about market trends and economic developments that can impact your investments. Avoid making hasty decisions based on short-term market movements and stay focused on your long-term financial objectives. Review your portfolio regularly and make adjustments as needed to stay on track with your financial plan. As we conclude this transformative exploration of the investment answer, I encourage you to subscribe to our channel and become part of our community of empowered investors. Share your thoughts and insights in the comments below and let us know which lesson resonated the most with you. If you want to dive deeper into the strategies outlined in the book, find the link in the description to get your own copy. It's your turn to do the work now. Here's the Scavenger Hunt Challenge. Use the internet to find the answer, then drop it in the comments below. In The Investment Answer by Daniel Goldie and Gordon Murray, the authors highlight 5 key decisions that are crucial for successful investing. What are these 5 decisions, and how do they contribute to building a sound investment strategy? Remember, investing is a journey that requires knowledge, discipline, and persistence. Implementing these key lessons can help you build a solid foundation for financial success and achieve your long-term goals. Thank you for joining us on this enlightening adventure, and until next time, let's master the art of investing together.